Imagine asking an AI for a quick path to grow your money in trading and getting the usual, focus on volatile assets and stay disciplined. It's like Wolverine telling you to use your claws to open a can. Sure, it works, but where's the fun in that? So, what happens when you push that AI a bit further, asking it to craft a detailed trading strategy using the latest AI-powered tools making waves in the trading community? Suddenly, things get a whole lot more interesting. Kind of like when Deadpool crashes a fight with his own brand of chaotic genius. But, just like Deadpool's idea of fun, the strategy wasn't perfect straight out of the box. It needed some serious tweaks and adjustments to even have a shot at delivering those big gains. After all, we're not talking about just any strategy. We're talking about one designed to flip $100 into $10,000 as fast as possible. The challenge? Making sure it is not just a pipe dream, but something that could actually work in real market conditions without slicing your account balance to pieces like Wolverine going berserk. So how does this AI-enhanced strategy stack up after a bit of fine-tuning? That's what we're about to find out. With the charts ready and the indicators locked in, it is time to put this setup to the test and see if it's truly the game changer it claims to be. Buckle up because the results might just surprise you, like a Deadpool-Wolverine team-up you never knew you needed. Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. So we kick things off by asking ChatGPT for a strategy to flip $100 into $10,000 fast. What does ChatGPT do? It throws out the usual suspects. Go for volatile assets, use technical analysis, and of course, be disciplined. Useful? Sure. Groundbreaking? Not so much. It's like asking for a gourmet recipe and getting told to just boil some pasta. Or better yet, like asking Deadpool for advice and being told to just shoot everything. But that wasn't going to fly. The creator sharpened the question, getting more specific. How about an AI-based trading view indicator designed to turbocharge that $100 into $10,000? Now we're talking. ChatGPT came back with a more fleshed out strategy. Though it wasn't exactly plug and play, there were some rough edges and it needed a bit of tweaking to really sing, kind of like Deadpool's singing voice, which, let's face it, could use some auto-tune. That's where we stepped in, making some smart adjustments to fine-tune the setup. The strategy had potential, but it needed that extra bit of polish to really go the distance. So now, with everything in place, the big question is, can this AI-human tag team turn $100 into 10 grand? Or will it be a Deadpool-style explosion, where the only thing left standing is a pile of burnt cash? Let's find out in a while. Before we get into the specifics of what we found out, let us know first. Do you think AI tools can possibly be the secret to successful trading? What are your thoughts on this? Let us know by making a comment and joining the conversation. Also, if you still haven't, give us a like and subscribe. Now that the strategy was ready for action, the next step was to put it to the test with some good old-fashioned back testing. This was planned to run 100 times using Ethereum on a 3-minute time frame. Why Ethereum? Well, it is a favorite among traders for its volatility and liquidity, perfect for a strategy aiming to turn a mere $100 into a whopping $10,000. It's like picking a fight with Wolverine. You better know what you're doing because things can get wild fast. The setup itself was built around 3 key trading view indicators. First up was the machine learning KNN-based strategy. This isn't just your typical indicator. It is powered by K-nearest neighbors, a classification algorithm that looks at historical market data to predict where the price is headed next. Imagine having a crystal ball that tells you whether to expect a price spike or dip based on past patterns. Pretty neat, right? Almost like having Wolverine's instincts, but without the growling. Next on the list was the EMA ribbon, a fan favorite for spotting trends. The ribbon, made up of several exponential moving averages, acts like a trend radar. If If it's sloping upwards, you're likely in an uptrend, and if it's pointing down, well, buckle up for a downtrend. It is a visual guide that helps traders figure out when to hop on a trend and when to steer clear. And for that extra layer of validation, there's the RSI, tweaked here to be more sensitive. This trusty indicator helps gauge the strength of price movements, confirming whether it's time to make a move or sit tight. With these tools in place, the strategy was locked and loaded, ready to see if it could deliver on its bold promise, like Deadpool daring Wolverine to a no-holds-barred smackdown. When it comes to jumping into a long trade, the entry conditions are like a checklist you can't afford to skip. First, the price needs to be above the 200 EMA, a solid indicator that the market's in an uptrend. Next, the EMA ribbon should be green, confirming that the trend is moving in the right direction. But don't get too excited just yet. The price needs to pull back into the ribbon without dipping below the long-term EMA. Once these boxes are ticked, keep an eye out for the machine learning indicator to flash a blue label, signaling it is time to buy. And to seal a deal, make sure the RSI is either oversold or neutral before pulling the trigger. For short trades, the playbook is pretty much the opposite. You're looking for the price and the EMA ribbon to be below the 200 EMA, signs that the bears are in control. The ribbon should be red, confirming the downtrend. A pullback is still in the cards, but the price must not close above that 200 EMA. During this pullback, if the RSI hits overbought territory, it is a signal that the market might be ready to tumble. Finally, wait for that all-important red label from the machine learning indicator to give you the go-ahead to sell. Only when all these conditions are met is it safe to enter a short position. Think of it as waiting for Wolverine to unsheath his claws. You know it's serious when that happens. When it comes to execution, setting your stop loss and target is like putting on a seatbelt before hitting the gas. The stop loss is strategically placed at the recent swing low or high, acting as your safety net if things go south. On the flip side, the target is set at 2 times the risk, giving you a solid risk-to-reward ratio. And here's the kicker. As soon as you've pocketed a quarter of your profit, you adjust the stop loss to break even. This way, you're playing with house money, minimizing your risk while keeping your eyes on the prize. Just like how Deadpool would keep regenerating and staying in the game even when the odds look grim. Now, let's talk about the results. After backtesting the strategy 100 times, the initial $100 ballooned to an impressive $19,527. Sure, the win ratio wasn't breaking any records, but here's where things get interesting. The risk per trade was cranked up to 5% instead of the more conservative 2%, leading to some heart-pounding drawdowns, but also some serious rewards. This high-risk, high-reward approach isn't for the faint of heart, but it delivered results that are hard to ignore, like that insane Deadpool-Wolverine brawl where nobody really wins, but everyone gets a show. But before you get too trigger-happy with that 5% risk, a word of caution. We wisely advise against this level of risk for larger accounts. It is a strategy that might be better suited for those looking to grow a small account quickly, where the stakes are lower, but the potential upside is significant. The takeaway? This approach is all about balance, understanding the risk and reward, and making sure you're comfortable with both before diving in. Just like Wolverine knows when to hold back, you've got to know when to play it safe. Wrapping up, this strategy showcases the power of combining machine learning with traditional technical indicators, allowing for potentially explosive account growth in a short period. While it's not without its risks, the method provides a structured approach to navigating the volatile crypto markets. By balancing higher risk with strategic stop-loss adjustments, it opens the door for small accounts to experience significant gains. It is like unleashing your inner Deadpool in the market. Chaotic, risky, but oh so rewarding if you play it right. If you found this strategy breakdown helpful, don't forget to smash that like button and subscribe to the channel for more insights and strategies. Share this video with anyone looking to level up their trading game. Your support keeps the content coming, so stay tuned for more ways to optimize your trading journey.